you should be seeing on your screen here now. As we get started, I'm going to launch a quick poll here just to get some sense of who's in the room, what your experience is with QuickBooks, if and what version of QuickBooks you might be using. That gives me some sense. So hopefully you can all see the poll. And if you would take just a couple seconds here to respond to those 3 questions, then we'll get started. Okay. So we're leaning towards a pretty inexperienced group, which I would expect. But we have people that have used it for up to 5 years or longer, and that is awesome. And if those of you that have some experience want to throw any additional comments or hints into the chat as we go throughout the morning, the more knowledge we can share with each other, the better. We do have a fair amount of people, maybe equal amounts of people that are desktop users versus online users. I will be using the online version for the class today. When I used desktop version, I had online people taking that class. So what I would just say in any case that what happens behind the scenes in QuickBooks is the same. How it looks different, how you get there, but once you're in the process of creating an invoice, how that looks is pretty similar, and what happens on the actual accounting side of things is the same. So there'll be a lot of things you can learn no matter what version of QuickBooks you're using. And as other people, or as Megan mentioned in earlier, please put your questions in the chat as we go today. We'll try to answer those. We'll take a break midway, and we'll usually try to answer some questions about break time and at the end. And I can stay on past 11 o'clock for those of you that might have an individual question that we haven't got to, or that's very specific to your so I'm going to end the poll, show the results there, just for everybody's benefit. And now we will get started. Okay. So I think one of the challenges for people that have come into the QuickBooks online platform from a desktop is just, again, it looks different. And even for those of you that might have only ever known the online version, I'm sure that you've noticed over time that one day you log in and something looks a little bit different. And that's going to continue to be. This is the platform that Intuit is investing all of their product development into, rather than the desktop that they're kind of sidelining, except for their very high level desktop platform. And so as they do new things and do add more features, you'll see things change. And they are certainly leaning into AI and creating agents that are there to help you. Whether you think they're helpful or not, that's probably a case-by-case basis. If you can take advantage of it, great. But with all things AI, do your own due diligence. Make sure that if they do recommend something, or they've put together a text or something for you, or suggested a transaction, make sure you read it and look at it and make sure it's accurate. I know some of the things I've seen, and I haven't really dug into it too deeply, but like they might say, hey, you've got these overdue invoices. Let's create an email to reach out to these customers. Well, that'd be a great starting point, but you wouldn't send the same not everybody is a late paying customer for the same reason. So you wouldn't send the same message to every customer. So if they do that, you might want to then take that as a base and then edit it to, because somebody you might not even send a reminder to because you just talked to them on the street yesterday, or you have another arrangement with them, or the reason why, they haven't paid. And so you might change that messaging a little bit different. But so, take advantage of it where you can, but just don't lean in all the way 100% in without vetting what's going on with that. Okay. So as you purchase a new QuickBooks Online account, and what I would mention, I did list in the chat several resources for you, one of which is a discount code or a website where you can get a discount on QuickBooks Online specifically. So QuickBooks Online, through their Intuit's normal sales channel, QuickBooks.com, they tend to have like a 50% discount for the first 3 months. It's pretty much standard. Sometimes it's better, sometimes it's worse, but that's a pretty standard feature I see when I go on their website. The discount code link that I provided you, sbdcfinancialtools.org, in the chat, their discount is 30%, but it's for 12 months. So it's a little bit better discount than 50% for 3 months. It does have a limit on which QuickBooks products they will discount. They don't discount the very beginning one, which is Simple Start. So just be aware of that. Intuit has some great videos on their YouTube channel that is in there. They also have a website and a newsletter. It's called The Firm of the Future. If you want to sign up for that, that's a little bit more accountant focused. But the thing I like to look at it for is new product features that they're rolling out. So just, and then I did include a link for their current pricing page. So those are some resources for you. So if you're starting a new account with QuickBooks, online, you have to have one account for every company, and you get asked a series of questions, and that process is basically setting up preferences and customizing QuickBooks for your use. So we're not going to go through that process here, but just realize that that's kind of the process that works that way. Also, when you start your QuickBooks Online account, one of the first things they're going to prompt you to do is to connect your bank account. And it's going to feel like you have no other option, but you do have an option to do that later, or, ignore it, get past that if you don't want to do it. It's one of the embedded features in QuickBooks that they really lean into as a way to streamline your QuickBooks data, your accounting data entry process, which is great. But sometimes it's with any new software, you don't walk into the software using 100% of the features from day one. You kind of start with the basics, and then you get that down pat, and then you learn new things, and you add, and you start learning more features and using more features of that software, right? No different than with accounting. You can use this without connecting your bank account. What that means is you're going to do a little bit more data entry manually, which honestly isn't a bad idea for getting to learn how to use the software and understanding the accounting business for your business, especially if you're new to accounting altogether. The more you have to do kind of manually, the more it'll stick in your brain of how this function works, where if it's just kind of fed to you and coming at you, you might not internalize what's actually happening. So I'll leave that up to you. I mean, if you've been kind of doing this in other worlds, or maybe you do this with your personal checking account with some online budgeting software, hey, you know what you're working with, and it's a little less intimidating that way. One other, and we'll talk more about the bank feed as we go through today. One other feature of the online account is you can have a free user for your accountant. So no matter what version of software you have, I think even in Simple Start, you have one free accountant user. So that's a way to give your accountant access to your QuickBooks should you have that relationship with your accountant. Depending on the version of QuickBooks you use, and there's really four platforms, will depend on how many users you have that have access to your account, which means how many people can log into that company at the same time. It also will dictate kind of the features that you have. So if you're at a very simple level starting out, great. But if you find that there's a feature that you need that level doesn't provide, you need another user, for instance, then you might need to update your subscription to the next level up. And that's a very seamless process. You just go into your account and change your subscription level, and then they'll bill you accordingly. So it's very easy to move up and to move down for that matter. But just know moving down, you're going to probably lose some features that, maybe you were using, maybe you weren't using. Also note that there are all kinds of other apps which are noted down here. And within each of these line items, if you were to go under Customer Hub, there's probably 1,000 other apps that could connect with this. And a lot of your major payment platforms like Shopify will integrate into your financial QuickBooks software. So beyond the basic, software subscription that you have for the accounting, there's other subscriptions that you can add that can, further tailor your experience with QuickBooks and the value and the things that you need it to do for you, depending on your business or industry. The apps that are available through this platform within QuickBooks, and I'm just going to pick on inventory. Let's see, this is actually the inventory function. Let's see. Let's see. Well, that wasn't what I expected. I expected to kind of get a list of that somewhere, and I will find it. It might be under up here, where you can access other apps, and just you can go in and look at what they offer, what their prices are. Those additional apps are usually additional pricing. And they're vetted through QuickBooks if they're available through this platform. You might have softwares that say they integrate with QuickBooks. Sometimes they do, but not so great. So if you're looking for something and you're not tied to something else, kind of looking through the QuickBooks ecosystem is the best place to start. So we're going to talk a little bit first about how to get around in QuickBooks. And for that, we're going to go back to home. This is where we started. Let's see. So when you start QuickBooks, this will kind of be your home place. If that's what you choose, you can always customize what's on here. And maybe you don't want to see this little business tax AI. You can don't show it again. You can snooze it. You can move it around, and you can customize all these things that are showing up. So you can kind of customize this dashboard to your own liking. The things that will remain the same will be this upper menu bar here and this along the side. So up here, we have our search menu, which is always helpful. You've got a live contact you can make with QuickBooks. Again, that can be a service available for additional charge. Other things that are integrating with your QuickBooks. So this is probably where I was wanting to get to. Instead of calling it apps, because now they call everything apps, they call it integrations, which is other softwares that integrate. So these are the ones that are integrated with this sample company, but then here's where I can find additional integrations to to plug into my software. This obviously is a help button. This is your account. And this is Intuit Intelligence. There's your little AI bot up there. The settings button is kind of where you go to, it's not where you go to do transactions. It's where you go to customize the software. So I mentioned when you get started, you do a little answer some questions. It's setting up your customization. And this is where you could further customize or change some of those customizations that were set up originally if your company changes. And we'll look at that again in just a bit. And then the other key one is this create button along the side. So along the side is really kind of where you're going to do your work, so to speak. And the create button gets you to all the different functions, as you can see as I hover over that, to actually do work, create invoices, receive payments, pay bills, create a purchase order, do your payroll, transfer money, do a bank deposit. So this is kind of your full access to all the different things you can do. Now you'll find as we go through QuickBooks that you can access the create invoice function on the customer page or on the sales page. There's lots of ways to get to the same place. But if you're not finding it easily wherever you're at, what you want to do, you can always go to that plus button, and that will give you access to all of that, no matter where you're at in the software. Also note, occasionally, and I don't see it on this screen, maybe later, if you see a few bars with an arrow like over here, that means you can hide, push back and give you a little bit of more real estate on your screen. If I see that, I will share that with you. Let's look at this gear icon again. So most of the things that will have to do with customizing your company are going to be under the Your Company tab. You have your lists of all your different, all the different lists that exist within QuickBooks. Please know that customer list and vendor lists are not available through lists. They are available through the customer platform and the customer app and the vendor app along the side here, or these along the top. And then other tools, things that you might do if you're importing data or exporting data or budgeting or reconciling or, doing some things with their tech help, sharing screens, things of that nature. And then your profile, your subscriptions, your billings, that sort of thing. Also note down here, there's switch from accountant view to business view. The difference between the two is really language. It's not even how it lays out necessarily. The accountant view has a little bit more accounting centric language, like sales and invoices, where the business view might be receiving money or money in, money out kind of thing, more common language. So if you're feeling like you're getting stuck on accounting language that doesn't make sense to you, try the business view, and that might help. Even the accounting language, they've softened quite a bit over the years. So let's go into the gear icon again, and let's go into account and settings. And I'll give you some samples of things that you can do to customize your company, so you just get an idea what's in here. And I would just suggest go in here and play around a little bit. So you've got your company information, your address, your phone number. Some of that stuff you can see is not in there and then maybe isn't required. But if you're going to send an invoice and you want your address on it, then this is where you would put it in there. Your phone number, website. The industry selection is more of a guide for QuickBooks. If you're in a certain industry, it might suggest hints for certain things related to your industry when it kind of suggests next steps. Not a requirement. If we go down the side here and we look at the sales side, that's where you can customize what prints on your invoices. Are you charging finance charges to customers? What's your inventory tracking look like? Do you do progress invoicing? Again, a lot of different things that you can do to customize your experience in QuickBooks and the products, or i.e. like the invoices that you would send out to customers, messaging and things of that nature. Payment terms, another one. The under the advanced tab, just to give you an example again, QuickBooks is always going to default to an accrual-based accounting method, which means you recognize revenue when the service is provided, not necessarily when you get paid for it. If you're a contractor and you're building a deck and you create an invoice to a customer, it's going to record it as sales, even though that customer hasn't paid you yet. That's the default. There are options within QuickBooks where you can print reports in either a cash basis or an accrual basis. Cash basis just meaning you recognize income when you get paid, and you recognize sales when you sell the product. You know, if you're truly a cash-based business and, you know, you do get paid right away when you provide a service and you don't have any terms of payment with customers or vendors, you can use that method. But if you're tracking inventory at all, the IRS recommends the accrual basis. There are accounting, you know, here's your fiscal year, your chart of accounts. The QuickBooks has the ability to include account numbers if you're using account numbers or want to use account numbers, but by default, they're off. So when you go to create an account, it's not going to have a field for account numbers. Then you would just come in here and change this. So again, if you're looking for something, well, why can't I put an account number in here in this new account? That doesn't make sense to me. Well, it's because this feature is turned off. It's not because the feature doesn't exist. So if you have questions like that, first go to the settings, look and see if there's a feature that can be turned on that you've missed. If not, it could be that it's not available in this version or this subscription level. So then you can also go to QuickBooks.com and look at the next version up and see if, oh, I don't get that feature until I move up a level. But first start with the settings, because a lot of it could be determined there. And again, look through it, because there's things in here that you wouldn't think about that could be useful. And if you didn't look through this, you might not find those things. So think about that. Under the, let's see. I don't think it's here. I think we need to go back. To here. Manage users. So if you have more than one user, you can manage those users. This is the tab here where the accounting firm user would show up, and your other users that you're paying for. You can determine each user can have a different role and a different status, so they can have access to certain things. So if you have somebody who's only doing your accounts receivable, you can limit their access to just those areas of the QuickBooks software. So that is helpful for users. Also, under the gear icon, you can customize form styles. So that's where you would edit your invoice template. Maybe you want to add a logo, maybe you want to change some colors, change some fonting, again, to customize it so it helps convey your brands to your customers. Under lists, we have things like chart of accounts, your products and services that you sell. There's another popular one is rules, which I'm not seeing here. That might be moved to a different area now. But one thing to think about in terms of rules is, especially if you're using the bank feed, you might want to say, hey, any transaction that comes with this name on it always goes to rent. You know, so you can help minimize how much work you need to do in categorizing transactions by setting up rules. And that might make a little more sense when we get into actually looking at the bank feed. One thing to think about in terms of lists, particular customer list, vendor list, and product and service lists is a naming convention. Be consistent about how you name your customers. Is it first name, last name, or is it last name, comma, first name? It'll make your lists cleaner. It'll make them easier to navigate. It'll make it easier for you to find your way around. And it will avoid you having John Doe and Doe, comma, John in your list as two customers. And that's how QuickBooks will treat them, as two separate customers, two separate statements, when in fact they may be the same person. So if you can set up some naming convention and some rules to begin with and stick with that, and especially if you have multiple people using the platform, or you have multiple personalities and you're using the platform, one day you're thinking one way and another day you're thinking another way, set some rules, some guidelines for that up front. It'll make your life a little easier. Okay, so let's go back to, get out of here, go back to our home base. I still find myself fumbling around a bit because, again, QuickBooks keeps changing how they lay this stuff out. But I would go to here. So you see these all apps, see all those categories: accounting, expense, bills, sales, get paid, customer hub. They're also up here. Same thing. So you can just go to accounting and get to the same spot. And then under each one of these, there is sub areas under each. I'm going to look at the chart of accounts first, because that is the backbone. And here's my little collapsible icon here. So I'm going to push that over to the side now so I have more room. I'm working kind of a small screen here. The chart of accounts is the backbone of everything you do. Every transaction that you enter into QuickBooks has two sides to it. And so it's going to affect at least two different accounts in your chart of accounts. So you may not look at this chart of accounts often, but it is an easy way to get to certain things. But again, generally not the only way. But just to understand what's here and how it's organized is helpful. So the chart of accounts is organized not in alphabetical order, although if you click this, you can put them in alphabetical order. By default, it's organized by account type, starting first with the accounts that show up on your balance sheet, which is your assets, your liabilities, and your equity. And then next with your profit and loss statement accounts, which are income, cost of goods sold, expenses. And within the asset class, for instance, there are various numbers of types of accounts that are assets. We have bank accounts, we have accounts receivable, we have other assets, including other current assets, including inventory, undeposited funds. Then we have our fixed assets like equipment, vehicles. Then we start moving into our liability accounts. You can see that it notes here that these are all on the balance sheet. So that's how we know they're balance sheet accounts. It doesn't really say asset or liability, but by the name of the account, and when you get into some of the classes, it does say, or account types, it does say liability. Assets are things that you own. Liabilities are things that you owe. So you start looking at accounts payable, credit cards, those are the things that you owe. Loans, notes payable. And then equity, these equity accounts you typically do not use in transactions, except for maybe in the very beginning. They're part of what happens behind the scenes with QuickBooks. The retained earnings in particular is just how it classifies earnings in the business. So at the end of the year, it will classify into retained earnings any earnings that were earned in previous years. And you'll see that on a balance sheet. You'll see net earnings, which will be this year's earnings, and then retained earnings will be the accumulation of all the previous year's earnings. And it's basically assets minus liabilities equals equity, but they break that equity into a couple different sections. Then we get into your P&L, your profit and loss statement accounts. That's something relatively new that they've added in here. I think that's a nice feature. Helps people understand what shows up on which statements. So if you're wanting to know what income you have made, you know to look at the profit and loss. So here's different kinds of income accounts. You'll see that some of these are indented, and that means that they're sub-accounts. So landscaping services includes, if you were to look at what's in landscaping services, that includes everything that's underneath of it, which is quite a few accounts when you look at it. So job materials is a sub-account of landscaping. Labor is a sub-account of landscaping. And do we have anything that further down? No, just those two. And then within job materials and labor, there's sub-accounts under them. So this allows, when you look at your P&L, you can either see the whole amount for all of them, or you can see a sub under labor or under landscaping for job materials and labor, or you can even see it in more detail to see the individual categories. So there's different reasons why you would do that. I wouldn't get too crazy with it. You don't want a, 5-page profit and loss statement. But if it's something that you do manage and you do track, this is an opportunity to get a little bit more detail in that area, and yet still classify them into different buckets. Service income, then we get into cost of goods. So if you're selling a product, that's the cost of the product that you sold to the customer, and then all your expense accounts. And within the different sections, so all the expense accounts, you can see the default is by expense and then alphabetically after that. So if you know that you're looking for an expense account when you come into your P&L or to your chart of accounts, you know that they're going to be down the list a ways. And then once you get in the list, you know they're going to be alphabetical. So if I'm looking for a telephone, I'm going to keep going, and have to go to the next page to see telephone. So that's how the chart of accounts is organized. You can run a report, and by running a report, see if we can pick one that might have some transactions. That just shows you all the activity in that account, and it'll pre-select a date period for that. So this is since 90 days ago, and there is no transactions, but let's say you wanted to see the last 12 months or the last fiscal year. Still no transactions, so that doesn't help us, but it would show all those transactions down below. This is a sample account. It does have some data in it. I just probably picked the wrong account to find anything. So in any list that you're in, whether it's the chart of accounts or your customers list, you're always going to have this action column, and it's going to prompt what it thinks the next action is going to be. So if you're here, you're probably wanting to see something, so maybe you want to run a report. But there's also over here other options where you can edit the account. And by editing the account, you can change the name. You're probably not going to change the account type. Maybe you want to add a description to give more idea to what you code in this. It's pretty self-explanatory by the name itself. Maybe you don't buy stationery anymore. Most people don't. So you just change it to printing or something like that. You can also make it a sub-account. So those would be the things you would do to edit account. Mainly that's changing the name is the main things people use the edit for. But then you can make it inactive. You can't delete accounts, particularly in the online world. In the desktop world, you can delete accounts as long as they don't have activity in them. In desktop, you don't actually delete them. You just make them inactive, and then they don't count against your maximum 250 accounts you can have in your subscription, whatever your subscription level is. Making them inactive, even if there's transactions tied to that account, what it does is it will hide it from this list or from any active list where you can choose a chart of accounts. It's going to hide any of the inactive ones because it's assuming you made it inactive because you don't use it anymore. So why would you want it in a drop-down list if you're not going to use it? What it doesn't do is it doesn't eliminate any past activity in that account. So if I decide I don't want to use supplies anymore, but I've used it for the last 3 years, making it inactive will remove it from the list, not clutter up my list when I'm trying to choose it. But if I go and print a report from 2 years ago and I had supplies expense in that year, it would show up on the report. So you're not losing any of that data. You're just trying to clean up your lists and the accounts you have to choose from by making them inactive. You probably see this as much with customers and vendors as you would with your chart of accounts. Okay. Let's see here. To add a new account, you just come up to this button up here. Again, it's going to ask you for certain things. You have to choose an account name, you have to choose an account type, and you have to choose a detail type. The detail type is just kind of an additional categorization. I haven't really found the use case for that yet. If you want to make it a sub account, and if you check sub account, it'll have you select what is the account you want to make it a sub account of. And then if you want to include a description, you can, and then you just save that. And it will get added into your list according to the account type and the name. You talked about account numbers, how you can make, access those. Okay, so the next thing we're going to look at is our bank feed. So we're going to go back to home. And even though this says feed, I don't know that that's going to get us. This is where I'm kind of still finding my way around. That's the business feed. That's more like what's going on in your business and what you should be looking at next. And that's more, again, that you notice the icon here is very similar to the icon here. It's their business intelligence line. So what we really want to do is go back to home. And the bank feed can be accessed a couple ways. It's under the accounting, under bank transactions, and also on this homepage under bank accounts. If we clicked on any of these, we would get directly to the bank feed. So the bank transactions, it shows us the 2 bank accounts that we have connected to QuickBooks. And that connection process is basically giving QuickBooks your bank account name, your login into your online banking system at that account, choosing that account number, and then that opens up the pipeline. So everything that gets cleared through the bank gets pushed into QuickBooks. And it gets pushed into this bank transaction window. At this point, the items that are sitting here on this window, down here, are not affecting any of my QuickBooks reports or activities. This pending window is just like it says, it's pending. It has not been posted into QuickBooks. When it gets posted, it moves over to the posted window. So it looks like, oh, all these transactions are, cleared my bank and now they're sitting here, and you just assume, or some people assume, hey, they're in my QuickBooks. Well, they're in your QuickBooks app, but they're not in your financial records until you categorize them. So what we have here is a number of transactions that are 25 of them to be exact, and then one over here on our savings account that need to be dealt with because right now they're just sitting in limbo. So when we go down to this list, this is what's being pushed over from the bank in terms of the date it cleared, the bank description, the amount, whether it's a positive or negative to your account. If they can pull out a vendor name, a name associated with that check that also lives in your vendor list. It might pick that vendor already for you. And then it's going to, on this action line item, as I mentioned earlier, that's going to prompt you what is the next move to make. Generally, it's the right move, but not always. So a couple things you will see here. Match basically means, hey, you already entered a transaction into QuickBooks that looks really similar to what came through the bank. And it actually identifies what that transaction is. So if you know that this check that cleared the bank is the exact same as this bill payment that you entered into QuickBooks, you can just match them. And you probably don't need to do a whole lot more than that because you put the transaction into QuickBooks. And when you did, you had the vendor name, you had the date, you had all the things that you needed, all the details were correct. And now you're just recognizing that, okay, that's that check. It's cleared through the bank. Let's match those up because we don't want to double count something and have a duplicate entry. So when there's a match here, it's telling you, hey, there's an entry in QuickBooks that looks a lot like this entry. If they're the same, match them. If they're not, don't match them, so it can tag things that are the same, especially when you get transactions that are for even dollar amounts that maybe don't have a name tied to them. You might have 5 transactions in QuickBooks for $100 and one comes through like this up here. It says, hey, there's actually 2 matches we found. Now you can choose which match it is. So that's one option. The other option you will see is post. So let's see. Wait, that. Trying to think. So for instance, this transaction says we don't know that we have anything in QuickBooks that looks like this. So we think this is a new transaction and you need to post it. Well, you don't want to just post it because number one, you want to make sure that all the information is accurate. Now it is prompting here or suggesting that this should go to equipment rental. Okay. It's A Rental is the name of the business. It's $1,200 that you spent. So intuitively that makes sense. And if that were correct, you could just post it. But if you're not sure, what you want to do is just click on the date and it will open up this window below. Again, here's another little, oh shoot, AI. Try that again. Get rid of it. It's suggesting a categorization or a posting. You get to choose the transaction type, which is probably expense because you spent money. If you wanted to say, put the vendor in here, if A1 or was it A Rentals? It doesn't look like they're in your list, but maybe they're a new vendor you've never paid money to before and you want to create them as a vendor. So you would maybe want to do that by adding new and putting that vendor information in there. Equipment rental, yeah, that might be the right account. So you leave that as is. If that's tied to some customer job, you might want to tag the customer name in this, or you might want to put a memo in here. So if I just pick post, it's going to get the accounting part right if I agree with this account it suggested, but you might leave out some other details that you would like attached to this transaction. So typically, if it's a match, I'm going to match it because 9 times out of 10, those are right. If it's a post, I might want to dig in and make sure I have all the details related to that transaction that I want. If you have a bank and a savings account connected and there's transactions between the two, there's another word besides match that comes up and I can't remember it off the top of my list. but are off the top of my head, but it basically means, hey, if I accept it here, it's going to affect both of those accounts and it's going to take it away. If I click on this bank feed for here, maybe this will be that doesn't necessarily affect my bank account, so it's not going to have that wording. But you'll know what it is when you see it. So that's how the bank feed works. It's pushing in a lot of data from the bank. And so as long as you know this is that's coming from the bank and it's going in and looking to what's actually in your books to see if there's any connection, and then you have to process it. Even in the case where it recognizes this, that it might be a match, you're not going to be able to clear this out of the bank feed unless you match it. So you don't want to leave them hanging there, even though you might already have that transaction in QuickBooks. You want to clean out your bank feed. What else do I want to say about bank feeds? Anything? If you choose not to use the bank feed, you can enter transactions directly, and we'll walk through that in after the break. That'll be our next step of entering transactions. I think that's it. All right, so at this point, we're going to take a quick break. We get started at 10 o'clock, about a 5-minute break, that would be great. If there are any questions in the chat, looks like we have quite a few maybe.
We have a few questions, Kelly. I'll help to identify those because there's been a little bit of other chatter as well.
Okay.
So the first question we have, do you have any experience for tips and tricks for taking over QuickBooks from the account?
From the accountant.
Accountant, excuse me.
I guess it's just understanding, what the accountant has set up. Are you just taking over? Are they using QuickBooks and you're just now becoming the user and becoming in charge of it? Are they doing their own thing and now you're starting all over from scratch with the software that you're using? I mean, the tips and tricks might change a little bit depending on the situation. If they need to export, if they are using a software program, even if it's not the same one that you plan to use, there's usually a way to export at least lists out of a software. If you're going QuickBooks to QuickBooks, you might be able to work it where you can bring over everything that they had done, so you have the history. But you also might not be able to do that. You might just have to have the old stuff be with the accountant and get whatever copies that you need printed off to have that record for yourself, and then start fresh in a new account. But you should at least be able to pull over lists from that account to start, so you wouldn't have to recreate your customer list or your vendor list or your chart of accounts. We can certainly have some dialogue about that offline too, Maggie, either at the end or if you want to give me a call, I'd be glad to help with that.
And Maggie did have to jump off, and so I did let her know you'd also be following up via email, Kelly, but I wanted to ask this for everyone, and assuming your answer would bring some benefit for everybody here.
Okay.
And then the second question, will we cover breaking up large expenses or payments into individual itemized depreciating asset expenses?
We will talk about splitting transactions. So yeah, I think that would cover kind of what you're talking about.
Perfect. I think those were the only two questions that we had for you. I'm just reviewing. Yep, looks like that's it. So I think we're ready for our break.
Okay. See you in a few minutes. All right. Let us continue on with entering some actual transactions here. We're going to go back to our home screen. Um, so I'm going to first talk about entering sales into QuickBooks. And when you use a sales receipt or an invoice form in QuickBooks, it doesn't give you a field to say what income account do you want this sale to show up in. It on the form it includes products. So the products are tied to certain income accounts. So that gives you a little more granularity if you want it. You can also make a product category. So let's just say you have a restaurant. You have food, beverages, and merchandise, maybe. You could have just 3 products in your product list. And then your food product line could be tied to food sales. Your beverage product could be tied to beverage sales, merchandise to merchandise sales. You could also be very much more detailed, and you could have every food item on your list, and maybe you have burgers and pizza, and so you have all these 10 burgers go to burger sales, and these 10 pizzas go to pizza sales. So you can really go into a lot of detail if you want, or you can keep it very simple. But to track that, to set up those products, those are in your inventory category under products and services. So we're going to view all products here. So you can see this is a design and landscape company. They have design, which is a service that they provide. They also have actual products that they provide. There's different inventory types. There's service, there's inventory, and there's non-inventory. Those are probably the 3 basic ones. I'm not going to go into a lot of detail with that today, but this is something you'll want to think about of how you want to set up your accounting so that you can enter sales. The caveat I will say is inventory, as you can see, is actually tracking quantities. So if you want to track the quantities of product that you have on hand, inventory you have on hand to sell, you would use an inventory item. A non-inventory item is still a physical product, but you're not tracking the inventory. You're only tracking the sales. So when you track inventory items, you have to put into QuickBooks how many items you purchased at what price. And then when those items get sold, they will come out of that inventory count based on what you paid for them. And they will also affect your income account for what you're selling that product for. So it's a little bit more detailed accounting. And if that's what you want, then you just need to make sure you follow the process and enter everything in as when you buy that product by unit quantity and price. Or if you just want to track the sales of the items, you can still track that I sold 10 burgers. You just won't be accounting for the cost side of things. And that makes a lot of sense when you're in a manufacturing space, which food service is, because you don't always buy the burger. You might buy a pound of hamburger that makes 4 burgers or makes 5 burgers, depending on what you're making. So you might just expense off to cost of goods sold the cost of that hamburger that you're buying bulk, and then just keeping track of how many actually hamburger sales you have. So there's multiple ways to track that, but I just wanted to point that out, and certainly could have more discussions. That's kind of a case by case discussion based on your type of business. So if we go into our sales and get paid function here, we have across the top here different actions. We've got the at a glance. piece here. Um, so we've got kind of a dashboard there. If we get to this overview. But what I really want to do is go to here. So we're here at the overview. What I really want to get to is to the invoices and the sales transactions. So we're going to start first with the invoices. And again, this is what you would enter with your, when you make the sale. So before we do look at that though, I want to take a look at, under the customer hub is your customer list. And just to give you an idea of what kind of data you can capture in a customer list, we're gonna look at a customer. So address, you can add notes, you can have custom fields if you want a birth date, an anniversary, a spouse's name, whatever it might be. There. I love it when it gives you all these pop-up things and you don't want to do. This again. I don't know what I did to get to that, but okay. Let's try this one more time. It has a summary of their transactions. I don't want to view the transaction details. Okay. Like there should be an X on this box and I can't reach it from where I'm at. So oh, well, I apologize for that. Oh, it was there for a second. Anyway, it shows the different transactions that you have. It's got kind of a history of their information. You have notes, you have payment terms. Does this customer have a line of credit, or not really a line of credit, but a credit limit, I guess is the word I'm looking for, that they can charge up to so many dollars with you before you quit offering them payment terms. So that's information that you may want to capture on customers. So when you create a new customer, you may want to go into that customer record and enter that data. And in the customer record, you could see a lot of activity, past activity for that customer. The other thing that is in the customer record is whether that customer is taxable or not. So if you're selling to a school or a city or a county, a government agency, they're not taxable for sales tax. So if you have a lot of those types of customers, you want to make sure you tag that in their customer record so that when the invoice is created, it doesn't automatically assign that to them. Okay, so let's go back to our invoice page. So let's do, on our invoice page, this gives us, again, kind of an overview. It lists all the invoices that are out there, and along with that, suggests an activity that, okay, there's an invoice from this customer that's outstanding. What's the best next logical action would be that you would receive payment against it. If you wanted to view or edit that invoice, you could. But what we're going to do is we're going to create a new invoice right here. So here's an invoice. Do not want to take a tour. And I'm just going to type in the customer's name. And they're in my list. So they're going to pop into my list. And any data that's in that customer's record is going to pop in here. what the payment terms are. If they had an address filled in, that would pop in here, an email address. And then it shows the invoice date is today and based on the payment terms when the due date would be. Then we scroll down and see we have this product service section. So this is where we're saying what product did we sell? We do weekly gardening services. So we created a gardening service product that is a sub account of landscaping. That's what the colons indicate, sub account. This is the description that was in that product or service record and the rate. There was no rate in there, so 0 was the rate posted in the invoice. But let's just say that 90% of the time we charge this as a $30 per week service. So I would have put $30 in the record, in the item record, so then it populates that for you. Otherwise, you have to change it every time. If you're charging the same price 90% of the time, have that rate be populated, but you can always change it. So let's just say it was $30, it populated as $30. We're doing 4 weeks of service, but we're going to increase our prices and I haven't updated my product record, so I can just change this on the fly. So if it's 0, I can change it to what it needs to be. If it's my standard rate, but I'm charging this customer differently for some reason, I can change it on the invoice. And then it does the calculation. And because this company is based in California, services are not taxable in California, so there's no sales tax applied. But that person also bought a rock fountain and products are taxable. So now we have a green check mark there. And it populated $275 as the standard rate for the rock fountain. But maybe this was a really extra special rock fountain that we had to charge an upcharge on for some reason. So we changed the rate. So now when this invoice is saved, the income accounts that are attached to these 2 separate line items will be increased by $140 and $350. One is probably a services-based income line item, and one is probably a product-based income line item. And if we went back into these product categories in our product list, we could see what that income account was. This then calculates the total amount of that sale, $490. So that's how much our income is going to go up. And then it chose a tax rate based on one of 2 things. Either what tax rate was identified in that customer's record, i.e. either they were not taxable or they are taxable at this certain rate, or the default tax rate that we've chosen for the company. So 8% is the rate. And it's not going to do the math for me until I save this, but it's only going to calculate that 8% on the taxable subtotal, which was the fountain. So if I save, there it does the math and puts the sales tax in there. So the customer owes me $529. When this invoice is saved, what's going to happen in my accounting system? My sales are going to go up by $490. My sales tax payable account, which is a liability account that says I owe somebody $39.20 for this sales tax that I'm collected. So in South Dakota, that's the South Dakota Department of Revenue, right? And then $529 is going to increase my accounts receivable account, which is the account that shows what customers owe me money. So my sales are going up by $490, sales tax payable by $39.20, accounts receivable by $529.20. So they're going to balance out. So even though I haven't been paid, if I did a profit and loss statement for this day or for this period, my sales would be of $490 would be included in there, even though I hadn't been paid. Okay, so that's the invoice. You can see there's different messaging you can put on there. QuickBooks has a payment function you can pay extra for, where it'll allow you to activate that and then just invoice this customer. You've probably seen these personally, where there's a pay function on it. They can click on it right in their email and pay through the Intuit's payment platform and pay by credit card. Or you can just email them an invoice. You can mail them an invoice. There are lots of options for delivering that. Okay, so I'm going to save. You can see down here where you can print or download it. You can make it recurring if this, you probably wouldn't do this particular one, but maybe the weekly gardening services, you have a contract with this business that you do that for them, every month of the year if you're in California, or 6 months out of the year if you're in South Dakota. You could make it a recurring invoice, so you don't have to enter all the data. You just have to tell it how often you want this invoice to be generated. If it's monthly, you could have it generated automatically for you before you save it. So I'm just going to save and close. So now if I go to my invoice list here, I didn't, should be 513. So it's going to be at the bottom here. There it is. That's the invoice I just created. And what is it telling me? The next step is receive payment. Makes sense. So let's say 2 weeks later, I get a check in the mail. I've got the money. I have to let QuickBooks know that this customer has paid me. So I want to record a payment in the amount of $529. And it knows as soon as I choose this, if he didn't pay me $529, I'd have to change this amount. But it already has identified what invoices this customer has outstanding. And because the payment was $529, it tagged this invoice as what it's being paid. If this customer had multiple invoices, it would look first for an invoice that matched the amount we received. And if there was no match, it would apply the amount to the oldest invoice first. You could always change that just by changing this payment and how it's distributed to each invoice. But in this case, easy peasy. Invoice was the same amount as the payment, which is what we all hope for. And then we can receive it. And now we just record and close. And what happens when we record the received payment? Well, the customer no longer owes us money, so our accounts receivable account goes down. And this payment amount, it records the payment date based on the date you're entering it. So if we received this 2 months or 2 weeks later, we would change the date. And if you want to say, hey, it was paid by cash or check, if there was a check number, you could add that in there for reference. And then it's going to default to go to this account called undeposited funds. So when I save this transaction, my accounts receivable is going to go down, and my undeposited funds account, which is an asset account, is going to go up. And what that undeposited funds account is think about it as the the cash register drawer, or the bank bag that sits on your desk where you put money together until you go to the bank. When I receive this check in the mail, I'm not taking it to the bank right away. It's kind of rare that, oh, I got this check today, I'm going to run to the bank today. And then this afternoon I get another check and I run to the bank. No, you kind of group them together for the day or for the week or whatever the period might be. So you want it to sit in this undeposited funds account. And I'll show you the relevance of that as we go into the next steps. But that's where it lives. So QuickBooks knows now that the customer no longer receives this money, and we have this money over here that needs to be deposited. So we're going to record and close. So that's one way of recording income. The other way of recording income is to do a sales receipt. So if we go back over to our sales and get paid and do a sales transaction, new transaction, sales receipt. This is the transaction type that you use when the customer comes into your store and pays you, buys something and pays. So let's pick another customer. Let's pick Diego, and it's the 27th, and he came in and paid check. And we want that check also to go to undeposited funds because we're not taking it to the bank right away. And down here, we're going to say, what did he pay us for? Let's say he bought, 4 cubic bags of soils to do some planting. So $40. Again, it's taxable. So we show down here where the tax will be calculated on $40. So what will happen then when this transaction gets entered? Whatever income account is tied to landscaping soil is going to go up. So my sales are going to go up by 40. My sales tax payable is going to go up by $5 when I hit record because that's going to recalculate that. And then it's not accounts receivable because they're paying us, and we've noted above that the payment is going to undeposited funds. So sales are going up by 5, taxes payable going up, or 40, sales taxes payable going up by 5, and my undeposited funds account is going up by $45. Oh, I did the math wrong, 43.20. Okay. So we're going to record and close. Now, the next thing we're going to do is make a deposit. And that is under here, under our Create Bank Deposit. There we go. So when we go in to make a deposit, we see all of these payments down here that are waiting to be deposited. And this is really what's in our undeposited funds account. So you can see these are the items that we just entered. We can add memos if we need to, but probably don't need to. So here's the two amounts. Here's the amount of the deposit that we're going to make. And if there were other non-customer related things that we're going to deposit, we could add those here. Let's just say you got a refund from your insurance company for your workers' comp policy from last year. Or from a claim you had, you could put that in as money received, what account you wanted that to affect, and the amount, and it would add it to this deposit. When I save this deposit, what's going to happen? $572.40. These two items are going to leave or decrease from undeposited funds, and my checking account is going to go up by $572.40. So now what will happen when the bank feed is connected to my account and that $572 payment or deposit shows up in the bank feed, it's going to know to match it with this. If I were to deposit everything individually, but I don't do that with the bank, then the bank's not going to know to match, and you could end up with duplication there. So you want to follow that bank deposit process through manually so that when it comes for the bank feed, all you have to do is match it. Okay. All right. So that's how we enter income. Now we want to go back. and look about how we enter expenses. So expenses can be entered in a number of ways, just like sales. We had how you enter sales if you get paid right away and if you don't get paid right away. And the same thing can be said of your expenses. Some expenses you pay right away, and other expenses you might get payment terms from your vendor. So you might have 30 or 60 days to pay that. I would count your utility bill or your phone bill, even though it comes in the mail today and you might have a couple weeks to pay it. I would count that as an expense that you pay when you get the bill. You know, it's probably not worth your time to track that as an accounts payable, but you could if you wanted. Most people aren't that current with their accounting that they're going to have it in there, be entering the stuff into the system and then later coming out and showing a payment 2 months later or a week later or later in the week for that matter. Those expenses are probably ones that you'll get through your bank feed and process that way. But if you're not using the bank feed, then you'll want to enter your expenses manually like we're going to show. So with the bank feed, your customer sales and your deposits, you're probably still going to enter pretty much manually through QuickBooks because you need to create that invoice for the customer. You need to know what you sold them. You need to know what their payment terms are. When you do the deposit, you need to know how many payments are included in that deposit. So you're probably going to do that work manually in QuickBooks regardless of whether you're using the bank feed or not. On the expense side, though, expenses, a lot of expenses you can just process directly through the bank feed and not enter them manually ahead of time. But I will walk you through that just so you know. So again, with expense transactions, you have a bill is what you would enter is if you had payment terms, or an expense would be expense, or a check would be, hey, I paid for it right away. Really, the only difference between expense and a check is check would have a check number field. The expense would be more like, if you used your debit card or you had an expense like your insurance premiums automatically taken out of your bank. There's no credit, there's no check number attached to those. So really these two act very similarly. It's just that this one has a check number field in it for you. Just like, let's see if we have a little bit better luck here with the vendors. Just like customers, vendors, that's under the inventory. Where are our vendors at? Maybe they're here. Okay. You have a list of vendors. You choose a vendor, and there's a lot of data about that vendor. So kind of, again, address, billing history, notes, transaction details, vendor details, which is like all their contact information, their email, their address, notes that you might have put in regarding a conversation you had with them about something. So that's kind of right here on the main screen. But also under the edit, you can see more detail. So we've got names and contacts, we've got addresses, we've got notes, we've got bill pay, ACH, if you're automatically set up with that, whether they're sales taxable or not, whether they are not sales tax, but whether they are a contractor that you would have to track for excise tax. So maybe, you're not taxing them because you're selling it to them on a wholesale basis. So are you tracking their vendor? Are they a 1099 vendor that you might have to do that? What payment terms do you have with them? The opening balance you would only use if you were starting in QuickBooks fresh. Your business already existed. This vendor you have a balance with this vendor. You want to put that in as the opening balance of day one when you started using QuickBooks. But other than that, you won't see that or use that. So there's lots of information you can collect on the vendors. And now we'll go back to Oh, there's expenses and bills right there. So we want to create a bill. We have payment terms with the vendor and we want to create a bill with that vendor. So we're gonna choose a vendor. So Cal Telephone, if it's my monthly telephone bill, I'm probably not going to enter it this way. I'm probably just going to wait till that shows up in my bank feed and then classify it as phone expense. But here, and we're going to say, typically it is due on receipt, but we bought a phone system from this vendor. So they gave us 60 days to pay that bill. So we've got until the end of July to pay the bill. And let's say there was a bill number with that. And normally what we pay this vendor for is utilities and telephone, and that's why that is pre-populated down here, but that's really not what we purchased from them. We purchased a phone system, which is a asset, which is up here. Oh, no. Right here. We don't have a fixed asset account for equipment, so we're just going to create one. So we're going to go back to the top of the list. We're going to add new. We're going to say equipment. It's a fixed asset account. We're not going to put an original cost in here. We're just creating the account because when we do this transaction, that's going to create the original account. And we could say, put some kind of description so we know what we spent that money for. And it's not customer related, it's something we're buying for the system. So when I create this transaction, my fixed asset account is going to go up of equipment by 5,600, and my accounts payable is going to go up because I'm not paying this right now. I'm recording the expense, or in this case, the asset purchase, but I'm not actually paying it. So it's not affecting my checking account, it's affecting my accounts payable. And back to your question, Ryan, about splitting out things, this is kind of where you do this, where you have these categories, these multiple lines. So let's say, one was the phone system, and even though we would probably put this in the same category, we wanted to split out 5 handsets into a different line item so we knew which was which. So maybe this was this, and this was 5,000. So if you want to take one amount and split it out to various amounts and various categories, this is how you would do it. Okay, so I'm going to save this transaction. And as I said, my accounts payable is going to go up by 5,600 and my equipment account is going to go up by 5,600. Now it's a month later and we want to make a payment on this bill, then we would go to the pay bills function. And it would show the bills that were out there that needed to be paid. And here's the bill we want to pay. And we said this was a month later, so we're going to change the date. And we're going to pay half of this bill. So that would be what, 2,800? So now it knows what we're paying, it knows what bill we're paying, and when I save this transaction, my checking account's going to go down by 2,800 because that's where I'm paying this out of. And my accounts payable is going to go down by 2,800 because now I owe this company less money, right? So I'm going to save. The scheduled payment seems like that's what you want to do, but it's not what you want to do. It's going to take you to a screen that wants you to set you up with bill payment through QuickBooks. So just make sure it's save or save and close. Save takes me back to the same screen, the same bill payment screen if I wanted to pay another bill. Save and close takes me out of the screen. Also notice I could pay all of these bills if I wanted. And it would create 3 different transactions for these 3 different bills. But still, my checking account would go down by that amount, and my accounts payable would go down by that amount. But it would show up in my checking account as 3 different checks to 3 different vendors, starting with check number 72. If I'm printing the checks out of QuickBooks, I can use this print later. But if I've handwritten these checks and I'm just kind of recording it after the fact, or I'm going to manually write the checks, then don't have that button clicked. Okay. So now we have 2 ways to, well, we showed you one way. We're going to show you the other way. The other way to pay bills is just to enter an expense. So record an expense. This is the expense as if it's an ACH or a debit card. Otherwise, I would go to the function that said write a check. And they both would come out of the checking account. Who you're going to pay is going to be the same. The payment date's going to be whatever payment date you want. The method, I'm just going to say check. And I'm going to put a check number in here, even though it's probably the wrong form, but it's going to do the same thing. So let's just say this was meals and entertainment. Do I have a? So I choose the category, the expense category I want affected, which is meals and entertainment. I chose the amount. And now when I save this, my checking account's going to go down by $58.50, and my meals and entertainment expense is going to go up by $58.50. So those are the 2 ways to enter your expenses. If you use the enter bill, always use the pay bill function. Don't say record an expense because you've already recorded the expense when you created the bill. Now you just need to pay the bill. You don't want to double up on that either. So the way they've changed the wording to this is better because people think write a check. Well, I'm paying this bill. I have to write a check, right? Well, yeah, but you want to use the pay bill function so that it knows how to tag it back to your accounts payable. Okay. So now we've entered income and we've entered expenses. We've talked about how the bank feed works. So as we would go through a month, one of the next things that we would probably have on our process to do is to reconcile our bank account. So if you go into the bank transactions, let's see, go to bank register, which shows all the activities in your bank account. For those of you that might still keep a check register, probably fewer and fewer all along. But this is all the activity that's affected your checking account. So this is going to be any transactions that you entered, any checks that you wrote, any expenses you recorded, any bills that you paid, any deposits that you made, or any transactions in the bank feed that you have categorized and posted are going to show up here. If they're still sitting in that pending window in your bank feed, they are not going to show up in your check register. So you want to make sure you've processed that bank feed for the month also. So let's say you're at the end of the month, you get your bank statement, you want to reconcile. This is how you do it. Reconciling your bank statement is important, even if it's very easy if you're using the bank feed, because everything that's cleared the bank has come into your QuickBooks. And so you shouldn't have forgotten about, oh, that insurance bill that's done automatically because it came through the bank feed. If you're not using the bank feed, it's a double check on those types of things. No, I do not want to do that. So reconciling is as simple as adding in your statement ending balance, because the beginning balance is going to be in there from the last time you reconciled the previous month, and the amount. So we have to put an amount here just to. And if I start reconciling, it's going to show me transactions during this period. And this is going to be a little off because it's a sample company. But if you were all up to date and you had all those transactions in here, it would, especially if you're using the bank feed, it would automatically tag everything that you've put in here. And this would probably be already zero and your job would be done. The job is to get this to zero. The job is to highlight anything on here that is showing up on your bank statement. And I don't know why. Oh, maybe I have to go here. Yeah. So let's just say all of these things are on my bank statement, and you can see every time I check that, this number changes. So if I've gone through and checked off everything that's in here that's on my bank statement, at the end, I should get to zero. If I can't get to zero, that means something's missing. And you can use your bank statement as a guide. So this says I've cleared 5 payments and 1 deposit. But my bank payment has 6 payments and 1 deposit. So I could say I'm probably missing a deposit. You can also look at the difference. Is there if this is the difference at the end of the month, hopefully it's not that, but it's probably a transaction or two that's missing. If the difference is divisible by 9, it could be a transposition error where it is on the bank statement for $86, but it was entered into QuickBooks as $68, or 68 cents even. So look at that divisible by 9. That's an easy way to figure it out. Usually it's a missing transaction or two, or it's a transposition error. There's not too much else that could be in there. If you, or you just entered 3 cents instead of 6 cents. I mean, if it's off by a matter of pennies, there is a way to force the reconciliation, but when you force a reconciliation, it does create a transaction within your checking account, as well as an account that's called reconciliation discrepancies, and it shows up in your P&L as an expense account. So, if I force this reconciliation, I would have a line item on my P&L for an expense of $3,417. And I can tell you my accountant would have some questions for me when it came time to do the taxes. So you want to make sure you get that as close to possible. My preference is you get it to 0.00. If it's 0.01 and you don't want to search for a penny, I get it. You can force a reconciliation. That's a rounding error, right? But you don't want to get in the habit of doing that. It should be easy to get to 0 if you're putting in things accurately and putting everything in. So I will get off my soapbox now on that. I don't have a good way of showing this per se in QuickBooks with this sample account, but as we were creating invoices, we talked about the sales tax. So again, how QuickBooks handles that sales tax, it's not an income to you, it's a liability. You're responsible for paying that money to the state. It's not money you get to keep or money you've earned. So when you go to pay your sales tax, you don't want to write a check and code it to sales tax expense because you don't have the income in your profit and loss for that expense. The money to cover that payment is in the sales tax liability account. So you want to use the sales tax function to, let's see. I want to not get to the overview here. Well, maybe that's all I can do because it's not set up. Okay. You want to use the sales tax function to pay your sales tax because then it will know to take it out of that sales tax liability account and affect your checking account. It's not going to show up as an expense because it is not an expense to you. Occasionally, though, you do have to pay sales tax or use tax. Let's say you bought a computer for your business, but you were buying it for your home use and you didn't pay sales tax on it because you're a computer dealer. So you buy computers for inventory, you don't pay sales tax on it, but then you took one of those out of inventory for your own personal use. You should be paying use tax on that. Or you bought something online and you were not charged sales tax. Technically, according to state law, you're required to pay use tax on that. So you would record that as an expense in that case, and you would add that to what you're paying for your other sales tax that you're collecting. So there is times when sales tax payments you make are an expense, but it's only in the case of use tax, not in the case of the sales tax you collect from customers. So there is a process of setting up your sales tax in online, and I don't have a good way of showing this, but I wanted to make sure that you understand to use that process. Things that you'll have to think about in that process is setting up your tax rates. So you have your state sales tax of 4.2% currently. And then you have your city sales tax, which for most cities it's 2%, but it can be anywhere from 0 to 2%. So depending on what city you're in. And then understand that sales taxes are collected based on where the customer receives the product. So if the customer lives in Groton, but they're coming to your store in downtown Aberdeen, you charge them the Aberdeen rate. However, if you're a contractor in Aberdeen and you're building a deck in Groton, the customer is receiving that service in Groton. So you're going to charge the Groton sales tax rate and the state rate. Or if you're out in the country at a location that's outside of city limits, then you're just charging the state rate. So you do need to track that appropriately in QuickBooks. And QuickBooks has some features that allows you to do that really easily and allows the customer address to determine or allows you to determine which address determines the sales tax rate. And then they have that sales tax information. So you'll want to work through that and make sure you have that set up correctly. Once it's set up, it's a breeze to do it, but you do want to set it up correctly. And just like I mentioned, if you have customers who are not taxable, make sure that that's identified in their customer record also. Otherwise, it'll look at their address and apply a sales tax rate if it doesn't know that they're not taxable. Okay, getting down to the wire here. I'm going to look at the reports quickly, and then we'll probably be at the top of the hour, but I'm happy to address any questions that we can at that point. So reports are over here on your side, and just like the settings function, I really encourage you to look through the different reports that are here. As you can see, there is a number of them. And you don't know what QuickBooks can show you in a report format unless you kind of click through and look at all of those. Any of these that have the green star, those are favorites. So when you start using a report and you're using that report on a regular basis, tag it as a favorite, because now instead of scrolling through this whole list, it'll show up here in your favorites list. Also know, and I'm going to look at a profit and loss by month so we can kind of see how that's laid out. Again, it's going to choose a date range I don't know how it chooses. It's just randomly. Last time it was the last 90 days. Now it's year to date. So I think it kind of depends on the form, but the easiest way to choose the date range is to pick a typical accounting date range. This year, last year, this quarter to date, this month. You don't have to put in the individual date ranges. If it's a really funky date range, okay, you might have to do it. But let's look at last fiscal year. Again, it's going to default to accrual. So now I can see my profit and loss for the last year. And you can see there's months across the top because this display by column says months. I'm going to change it to years because that's what I wanted to see was the years. But if I wanted to see months or quarters, I could run this report for this whole period and then display the columns by month or by quarter. And I'm just going to do by quarter quick because you can probably see that a little bit easier than the number of months. But now I've got each quarter plus I've got a total, which is nice. So let's go back to year. So here's all my income accounts. And then I have my cost of goods sold. And then I have my expenses. Man, that's not very many transactions. Let's do this year. That's a little bit more transactions. So anytime you see these little arrows, you can collapse. So here's my sub account for landscaping services. I have job materials and I have labor as sub accounts under landscaping. So let's just say I don't want to see the detail under labor or job materials, but I still want to see the detail under landscaping experience. So here's how it shows. This 6,372 is the total for landscaping services, which includes labor, job materials, and any transactions coded directly to the landscaping account. Now, if I don't want to see this breakdown, I can collapse it to that. And now you can see where it's a little bit cleaner of a report, a little easier to see. Same for here. So anytime there's a sub account, you're going to see a total for whatever the sub account is, and it's bolded. I can also just collapse the whole thing. That up here. Compact. Collapse all. And that might be not enough detail, right? So I probably still want to see all my expenses and all my other expenses, but I don't want to see the sub accounts underneath. And I might want to see income, but without all the sub accounts. So now if I wanted to see sub accounts, I could, pick and choose which ones. So this is a lot cleaner look. So again, total income minus the cost of goods sold gives you the gross profit to pay all your other expenses. Then you have your net operating expenses. What did you make for doing the business? And then these miscellaneous things, again, might be an insurance refund, things that really aren't part of your day-to-day operations. So this is more of your operational profitability, and this is your overall profitability. I'm going to look at another report. So back to reports. The other thing you can do with reports is you can, just what I was doing there, that I customized it, right? I could have saved that as a customized report so that every time I picked profit and loss collapsed version, I could name it whatever I wanted. It would have those collapses the way I wanted them, and I wouldn't have to do it every time. So you can customize reports. You can also, I'm just going to choose a different report to show a few different other features. Sales by customer summary. So this is all my customers. Of course, just for the month, I want to go for this here. Here's all my customers. Now, I might want to sort these customers by, well, here's where I can display columns again by different periods, like each quarter. But I want to customize it because I only want, first of all, I want to only see customers. That's not going to tell me what I want. Filter by. I want to filter by customers and condition equals. I only want to see certain customers. What I was trying to figure out, and I know there's a way to do it, I just haven't seen it right here. Maybe I need to add a different filter. That I want to filter by amount equals $1,000 or more. Then that would only show me customers that were $1,000 or more. So I could filter out the data I didn't want to see. You can mess with your headers and footers. You can over here organize this by the dollar amount. So now I have my customers by total. That's kind of what I did. From highest to lowest also could be helpful. So again, there's different ways you can customize either by taking the data that's there and arranging it a little bit different or filtering out the data that you don't want. And then you can save that customization, give it a name, and it will show up in your reports list. And I think the customized reports you can show, also you can favorite those. I think I have to go back to this reports list over here to get to the custom reports. That's where they would be saved originally. And then you could favorite them from there. So there's a lot of things you can do with the reports. There's a lot of reports in there, and there's a lot of things you can do to customize them even further. You can always export something to Excel and customize it even further if need be. So keep that in mind. And then you can memorize or save those reports so you don't have to do that same customization over and over again. With that, I will check and see what we have for some questions. If there's anything in particular.
We have a few questions, Kelly.
Okay.
First is, one moment. Can you change the settings to only see everything / default to cash basis instead of accrual?
If you want a cash to be your default option and that's how you're tracking your accounting system, you would go back into the settings under account. I think it's probably under advanced, maybe. No, or maybe it's under accounting. No, I think it's under advanced. I'm pretty sure we saw that. Yeah, right here in the accounting method. You'd want to change the accounting method to cash. Then every report would always show as cash. And I think it still would give you the option to see it in accrual basis if need be. Yeah.
And then in the invoice product description area, can you add additional text?
Yes. The product description area that shows up, or what shows up in there automatically anyway, is, let's see, is what's in that product record, that that item in your products and services. When you create that product record, you can give that a description. That's what's going to show up in that field automatically. But you can edit that field. You can change it. You can add to it. If you're having a pretty generic line item, this can be changed. This you can't change because that's tied to the item name itself. But this description, yes, can be edited.
Awesome. And then I am um going to say quickly before we continue with questions, I want to thank everyone for joining us today. I just posted a link in the chat for future events that we have coming up. So if you enjoyed this training or other trainings, go ahead and check out that link that will have future trainings listed. We'll also be sending out a recording of today's webinar. So it will include everything that Kelly walked through and question and answers as well. So if you have to sign off, thank you for coming today. But we're going to keep rolling with questions for now. So um, I'm just going to drop Kelly's email here. And then I'm going to pivot back to questions. All right. So first, next question. Do you have to create an invoice for cash sales in a restaurant or bar setting, or is there a smoother way to enter daily cash income?
You know, again, you can be pretty simple with this if you want to create an invoice for the day. And you probably wouldn't do it as an invoice because you've gotten paid. So you'd create a sales receipt for the day for daily sales, maybe make the customer name daily sales. And depending on how much detail you're tracking your products and services in, that might be as simple as food sales and beverage sales, total for each sales tax. So there is a way to do it in a more, because the reason you want to do invoice or sales receipts is if you want to track individual customer names. And in a restaurant business, you're probably not doing that for your day-to-day customers. You might do it when you cater an event and you have to send an invoice to a business or a customer, but for your daily sales, you can certainly group that into one. You bet.
When you save a payment or expense, can you match it to an existing line item in the bank feed?
When you save anything that you do in QuickBooks is going to stay in QuickBooks. And then when the information comes through the bank feed, it's going to find that and automatically kind of pair them up. And so that's where you see in the bank feed match is the suggested. So it's not like you go in and match that to the bank feed. It's more like the bank feed matches it to what you already have in QuickBooks, if that makes sense.
All right. And last question, is there a separate process for excise taxes, or do they also go in the sales tax section?
So excise taxes come into play when you're in the construction business. Um, and it's an improvement to realty. It's a tax that's somewhat unique. There's not too many states that have it, so QuickBooks does not have a good option for tracking that. It's generally a tax that you pay. Yeah, yes, you kind of add it to the customer's bill, but it's really your tax to pay. Um, I've seen customers do it different ways, how they account for that. That'd probably be a good question to have offline with your specific situation, about how you're collecting that from your customer, billing out to your customer, and how you should pay that on to the state. So, I mean, and if you want to come on camera and unmute yourself, we can have a conversation now. I'm not opposed to having that conversation now, especially if is that our last question?
Yes, it is.
Yeah.
So, Ryan, if you would like to come off mute and talk more about this, you're welcome to do that at this time.
Or if not, we can talk another time too, Ryan, but now it's fine with me if it's okay with you. You can return. I don't know how many people we have left on them.
Yeah, and if anyone has any other questions, feel free to put them in the chat.
Yep. Or unmute. Okay, I gotcha. Thanks for that, Ryan. Yeah, feel free to reach out. We can talk through that. And congratulations on your new new role.
Okay, thank you so much, Kelly, for leading our training today. I'm going to share contact information one more time. Um,
There, I just stopped sharing my screen, so hopefully that means you can share yours.
awesome. And thank you everyone else for joining us today. We really appreciate you being here and look forward to seeing you at our next training.
Have a great day. Thanks.